Tuesday, October 3rd, market analysis, Stan Ehrlich. Sorry I'm a little late today, currently 10:20 California time. I just finished a 45-minute interview with Traders Workshop with Ninja Trader. And we discussed a lot of what we will discuss right now on my daily market analysis. Let's go to the stock market indexes and the S&P 500, E-mini, and Spider I talk about every day. We now have new lows for the trend down. And after breaking out of a head and shoulder top formation on September 21st, the minimum downside objective is 406. We're already down a little bit at the moment below 422. So one really big down day could do the trick, but I don't expect that. Let's be normal about this. You know, it may take another week, maybe a week and a half, 2 weeks at the most, in order to come down another 15 or so points. And that's what I need. Could be a lot less than a week. At this rate, we're currently down 5.4. New lows, new low closes for the Spider. 3-month head and shoulder top I've detailed for weeks and weeks and weeks now, and it's working just fabulously. You see the formation on the screen. So there's the first shoulder, June 15, 16. The head of the formation with an ER sell signal on the very top, July 27th. And the last shoulder high, September 1st. The neckline is my red line there, broken to the downside on September 21, creating the possibility or likelihood of 406 objective. That's what these patterns predict, if you know how to use them correctly. And we're on our way, and we're about halfway down already. But again, I've detailed this way back, probably in the area of late August. I started talking about it. Maybe a little earlier than that. Let's look at the next chart. The DIA is in new low ground substantially and way over halfway down to its minimum downside objective. And I keep saying minimum, and that for the DIA is 324. Because the patterns, head and shoulders, can produce moves that are much larger, I don't expect that, than the minimum expectation. Because we're in October now, I expect the October lows to catch like they did fantastically last year on October 13th, with many of my indexes producing green bullish ER buy signals on the bottom of the market. I'll go back real quick to the Spider because that is my favorite. And of course, on October 13th, we had a green bullish engulfing at the bottom of the bear market of 2022 in October. And we recently had on July 27th, a red bearish engulfing sell signal at the top of this big bull move, which is not the finish of the long-term bull market that I think is going to last well into next year and maybe even through next year and longer. I think this is going to be the low this October. I think it's going to be around 406. And I'll tell you that I think it's going to be, and I'll flip over here to the October lows chart, October 16th. So I pegged the date and I pegged the price. That is it's a little dangerous, to say the least. So this is the cycle, October cycle. It has been 90% in October since the beginning of the S&P 500 30 years ago. I'm showing you everything from 2015 to this month, which hasn't happened yet, of course. And we're coming down into that October low. This should be a really good investor turning point. as well as, of course, anything shorter term than that, scalpers, swing traders, and so on and so forth. So back to my indexes real quick, and let's look at the QQQ for a second. The NASDAQ, has not yet broken out of the pattern, which is absolutely there. So if it works the same way the other patterns are working and already half finished, then we should expect a break of this line, the neckline, real soon. And it could happen today, but this week, and a move down to my minimum objective of 321 on the QQQ, which happens to be, again, approximately a 50% retracement of the bull move since October to July, and an area of significant support in October. The setup here is just great. It'll be a long, long time until I see a setup quite so profound. Next is going to be the Russell 2000, and it has broken bull trend lines. It has broken the neckline a week and 2 weeks ago. Whoops, what happened here? All of a sudden I get data coming back. Okay, thank goodness. You know, stuff happens. So the breakout to the downside was great, and that was on September 19th. We are way in new low ground. In fact, ladies and gentlemen, we're starting to get oversold again. So I'm not going to be surprised if there is another little bounce across the board in the major indexes, and the market goes up a little bit for a couple of days and then hits new lows again and again. But I do expect in this month, October, that we're going to have a bottom, that it's going to be reaching my 166 for the Russell 2000 objective, and we'll see what happens. So right now, some things are recalculating. I think I'm kind of stuck here while my cursor is an hourglass for a few more moments. I hope it goes away real quick. So I'll concentrate for a moment on the Russell a little bit more. There we go. The Russell has a downside objective that's extremely close to the lowest lows for all of last year. And that support area is just a little bit below my minimum downside objective. We might see a very, very, very broad triple bottom if it can get all the way down to 162. My objective is 166. Okay, good news. Now, the E-mini December futures contract specifically. New lows, likely a new low close, but again, we're getting a little oversold. So I think we're coming close to another little bounce like we had last week. It won't make new highs for any significant amount of price or time, and it should make new lows real quick after that. And again, the total break here down to 4,000 on the E-mini December futures contract should be this month. All right, let's go to the MES, same pattern. It's, of course, the micro E-mini, just to show you. The shoulder is here. The head, we have a sell signal smack dab on top, along with two other sell signals. So the high day we picked with our ER sell signal technique. It's working right out of a textbook so far. On the right is the 1 minute chart. You can see we made the low of the day. We've had a bounce for approximately an hour or so, and we may be in the process of making new lows before the close. Futures, futures, futures. I was a futures broker for like 30 years. Let's start out with the NASDAQ this time. I did not fill in the shoulders, the head and the shoulders. I've got the neckline drawn in. We tested the neckline a few days ago, but oversold at the time, caused a little bit of a bounce. Now we're rushing down toward the neckline again today. Very soon, today, tomorrow, seems very plausible. We're going to break the neckline and start heading Tierra del Fuego, south. Next chart, bonds 10-year notes, and then beyond. Wow. This implies that the rate hikes that the Fed has imposed haven't stopped. As this goes lower, rates go higher, day by day. This is definitely bearish for the stock market, and in my opinion, and a little more of a break to the downside that I was totally looking for. I didn't think it was going to come down this fast and this hard in the last couple of weeks. So you work with what you got. Terribly oversold. That is almost a 10. Yikes. I got to tell you that this is the low day, or tomorrow, but we're super close. Whenever you see such a low RSI level, and it's the lowest on your screen, and it's going back a full year, it's the lowest in a year, that the odds of the market turning around and rallying somewhat, or maybe a lot, are very close at hand. Very close. The rally should come back up to maybe 117, maybe a little bit less, and then start to come back down again. Next chart. The NASDAQ, skip that. E-mini, skip that. Okay, here we are. Good. 10-year notes, like bonds, new lows, very oversold. Not quite so much so, but definitely very oversold at 19, and probably close to the beginning of a little rally. Next chart. Crude oil. Aha. Broke a little bit of support from the last 2 weeks and is now higher on the day. I get the definite impression that this does not want to start dropping more. I need to close below today's lows in order to get a downside correction to 82. I'm basically bullish because the trend has changed on this broad double bottom here over a couple of months, and all of the resistance areas that we've seen stop it in the past, there it is back in August 9th, didn't stop it the last time up August 31st. Plowed through it, getting overbought, and finally a few days ago at 95-ish turned back down again. But it's a bull trend. There's no top formation per se. I'm not getting any major sell signals. This is bullish, and I'm looking for a buy signal on this downside correction to make new highs. Next chart is heating oil. I could say almost the exact same thing for heating oil. And support starts at 3.02. And I think we're going to see that tested in the next few days. Next chart is natural gas. Oh boy, this is a sneezer, or snore rather. Boring. Big flat sideways trading range. You know, I'm kind of getting the impression the government's thinking of regulating this so prices won't move much. That's the impression I get. I haven't seen a market go flat like this for such a long time, in a long time. No comment, no direction, no opinion, just sideways. Next chart is gold, silver, platinum, then copper. Gold, I've been telling you, is about to turn around, and it hasn't. Our oversold condition is very low at 11. It is highly likely to be a low today. I probably said that yesterday, and it wasn't, and maybe even the day before. So I'm on my toes here, watching for a buy signal. A reason to scream bloody murder. We got a low in, and we're going to see a rally back up to at least 1,888 and maybe 1913. Next chart. Silver. Same commentary. And by the way, this rally high 2 days ago, that little spike there is legit because I looked at the data. It looks initially like bad data on a daily chart, but it's not. And because it failed so badly after a sharp rally, it challenged the support area and started to break it. And yesterday it broke it like crazy. And the downside move was so dramatic. We got a little bit more follow through today, but I'm thinking with a current quote that's higher than yesterday's close, we probably saw a low this morning, and we're going to rally back up now, starting the rally up to 22.3, maybe up to 22.6. Next chart, platinum. Not quite the same. Just started to break into new hello ground for quite a long time period, but not oversold. Very close. Maybe in the next day or two, we're going to get oversold, and then I can say the same thing about platinum, but it doesn't look like it's quite ready to turn around. This is October platinum, by the way, specifically, not a continuation contract. It's a tradable futures contract. Next, high-grade copper continuation, broke support, but it's not staying below the red zone at this point. It's popped right back up to the resistance, previous lows. If it slips back down again before the session ends, that's probably a major downside breakout. But the way it sits right now, it looks like a washout, a false breakout, and maybe about to begin a little bit of a rally. I'm sorry, that's the best I can do at the moment with this because it's not very definitive. Next chart. Soybeans. Excuse me. Dropping into new low ground again, staying below for the second day the major previous support area, and new lows for the move down since June. So even though we're oversold, we might have some more downside potential before a bounce happens. When at maybe lower prices, the bounce happens, it's probably going to stop at around 1280. That'd be my first choice. Maybe 1310. But I wouldn't go short down here because we're oversold. No, don't do that. Don't go short in oversold conditions or go long in overbought conditions. You end up with sell signals like we got on the top. Soybeans look like they're heading lower, but there might be around the corner a little bit of a rally. And I'm saying maybe after a slight new lows. Bean oil, bullish engulfing yesterday, outside up day, slightly oversold, qualifies, no questions asked. Today's low is almost at our ER3 buy dot, the green dot, which happens to be at 56.57. Today's low is 56.62. I missed by 5 ticks for the entry on an ER3. But remember, every time you see green, we're long, always with a protective stop loss, same thing. So if it didn't work like this buy signal or this one, we get out very quickly and don't lose too much. There's also a chance that that green, even though it looks like it couldn't have made some money, might have, because the ER1 scalp gets out by the close of the green day. And that was unchanged. That was at the high, about the entry point. There's a sell signal smack on top. That's what we love. Here's a buy signal almost at the bottom. That's what we love. Plus ER3 got long a day or two after, right smack at the low of the day almost exactly. Next chart. This looks slightly bullish. I'm looking for a rally back up to 59.17 and probably the new lows after that in a week, 2 weeks. Next, soybean meal. I'm sorry to say this, but head and shoulder top in soybean meal. And we even talked about this on the Traders Workshop, Ninja Traders Workshop. I just finished 45-minute interview. You can see it on YouTube anytime you want. That's the second time I was on. It was last November. I was on the first time. And they've told me that I might get on just before Christmas because I want to talk about the Santa Claus rally for people and you. Breaking. What I think could be construed as a neckline. Now, I haven't drawn in the arch mark for the head. That's this big trading range up here for a month or two. The shoulder's big and fat and wide here. It's the July, August, September. And going back to last year, this is very, very big. This is a full year in size. Yeah, and that's considered big for head and shoulders. Any pattern for that matter. That's the shoulder way over here on the left. So the symmetry is there. The pattern appearance is there. The neckline is upward slanted, which is very typical, is there. And today, we're breaking the neckline. I got to give you guys a real guess here, an educated guess. From the top of the formation down to the neckline is the depth of the formation. And that distance is going to be approximately down to, I would think about here, 250. That's what I'm just visually coming up with for my approximate downside, rough downside objective if this pattern works. The next step of the game on this head and shoulder top and soybean meal is for the previous support level to be broken. And it came real close to it today already on a closing basis, closing below. And that'll be a new low since way back a year ago. Wow, 11 months ago. Wow, this is a breakout, it looks like. Now, it's not uncommon to see it get oversold when it's a breakout because it has to come down some significant amount in order to get to the breakout point typically. So I think we're going to see an oversold condition for maybe another day or two while it breaks below support. And I hope it closes below the neckline, which is not very far below at the moment. If it closes back up above the red line, which I just highlighted, then you do not have a breakout. You have a false breakout, and there should be a rally. But we're right here between the rock and a hard spot. We need to go up or down one way or the other to have a breakout or no breakout. Next chart, corn. Resistance seems to be stopping the rally, which I expected. I think we're about to see new lows for the trend in the next few days or week. Can't help to be bearish. Long-term trend is down. Every significant or intermediate rally we've seen has failed to make new highs and stay there for any length of time. Yep, looking for new lows, looking for this market to come down more. I don't have a downside objective. The first significant support is going to be around, gosh, I don't have my price scale on the right. That disappeared for some reason. That's weird. At that level, whatever it is, 455. Next chart. Wheat got oversold. The rally is back up exactly where I said it could be a day or two ago. 573. So that could be it. Now, I'm not going to be surprised if it can push a little bit further than that up to the best resistance at 620. So that would be very nice, but not changing the trend, not changing the expectation of lower lows, and not changing the likelihood of the bear market perpetuating itself over a huge amount of time, multiple years. You know, we also sold the top of the market at the beginning of the war, March 8th, with an ER signal, bearish engulfing, smack dab on the high day exactly, right back there. We got another one as the market started to move down around May 24th of last year. No signals recently, oversold caused a rally. Next chart. We've got cattle. And this is unique. I am now showing you a weekly chart. It has a cycle marked with the green lines across the bottoms. For the moment, I'm going to eliminate the red ones because they're not behaving as I would like. So I'm going to ignore them. And we have a cycle low that is a cycle of 181 weeks. This is multiple years. Look how profound each of these lows have been. Big bottom, gigantic bottom. Remember, this is a weekly chart. And that's 1 year, 2 years. Next one, in 2013, huge bottom. Every one of these is huge. Next one, October 14th, 2016. Last one, about April 10th of 2020. We now have, during the last few weeks and in the next week or so, another huge cycle low. I can't help it, but I have to turn bullish because of the cycle. I know we're overbought on this weekly chart. I normally don't look at weekly charts, but if this is going to come true, the price of cattle is going to go skyrocketing. I don't want to say that, but that's what this tells me. One last chart. Well, that's not true. Let's go to the next chart, and I hope I don't have a complication here with my continuations. Next chart is hogs. Now close to being oversold, not quite, but in support. So there's a good chance it could stop dropping here and start to rally back up, but it's not oversold yet. That bothers me a little bit. I'd love to see it oversold also. So I'm looking for a buy signal, but I'm basically bearish, and the trend seems to be turning down. Look how nicely this major resistance area around 70, 78 stopped the market 1, 2, 3, 4, maybe even 5, 6, 7 times. When it came up to the bottom here, 77.5, starting way back in July 6th. Now that broke resistance, but it didn't close above the resistance. It closed not only not even in it, but below it and lower on the day. That is a blatant failure. So it dropped off a couple more days. All right, next chart. Yeah, I was afraid of that. I can handle the situation. So that was hogs, and we're going to go to OJ. And that is still basically trending higher. I can't believe it. This market just won't stop. I'm going to have to turn to prune juice for a vegetable juice instead of orange juice. It's getting so expensive. I got no comments. This just won't quit. The next chart is going to be the cocoa. 3 more after that. Coming down to support, I expect 3,300, give or take a little, in the next few days. Was oversold, did bounce a little, not again, at the moment oversold, no. So it has elbow room to the downside and just about to make new lows. Next chart. And it could get a lot more bearish than that. Coffee, coffee, coffee. Support held, not quite classically, but not very well. I'm afraid this just might break into new low ground and not start to rally. I'd like to see a rally. That's what I think would be more likely. But after yesterday's beginning, we're doing nothing today. Doji means sideways, means uncertainty. I think it's going to rally. No major opinion, not very anchored in that. Just a second. Sugar. And then our last one. I know it's a long one today. Sugar is breaking into minor new lows recently. Oversold conditions did top it out. And there's a good chance we could slip off to probably 24. Yeah, maybe down to 23, 25. Maybe I'm finally going to get a downside breakout of consequence, which would be below 23, 25. That would cause me to bring up the topic of getting back to 20 again, which I've been saying off and on for a few months. So looking for more downside correction. You know, we're going to bounce a little here and there, if I'm right, because we're all the way down to 30 now on the RSI. So pretty big break in one day. Last chart should be cotton, and I'll go to that right now. And cotton is not doing too much, starting to slip a little after hitting resistance 1 time, 2 times, 3 times, 4 times, and now new lows for a couple of days. I need a breakout, a minor breakout below 85, and then we'll start to chew away at 83.25, and maybe we can come down to another support area at 76. But it definitely is starting to look more and more bearish. And that's it, ladies and gentlemen. You can go again to Traders Workshop, Ninja Traders Workshop, and listen to my 45-minute interview with Tom Schneider. Have a great day.